right, well, welcome to another edition of the Mortgage Update with Mike and Joe. How we doing, Joe?
I'm good. How are you, Mike?
Awesome, buddy.
Well, Mike, you might notice I don't have my hat on.
I did notice that, Joe. What's the reason for that?
So, if you watched our last podcast, at the end, our podcast was hacked.
Yes.
They encrypted it. They took our podcast away from us. So,
Okay.
as a ransom, they wanted my hat.
Okay.
So I had to fork my hat over so we could get our podcast. It's the sacrifices that we make for our listeners.
Right, exactly.
So to get our podcast back, I had to fork over that Big Bills hat that I wore last time. I'm a little disappointed. I'm negotiating now to
You
get
are?
it back. Yeah.
Okay.
The bank's willing to give a cash ransom.
They are. Well, listen, I think that Bills hat, particularly with the Bills kind of being on a roll right now.
I'm a little nervous about Sunday now because I don't have the hat on.
I know, exactly. So, well, Joe, obviously we're moving out of Halloween into Thanksgiving.
We are.
Yeah.
And it's crazy to think. I wanted to ask you, before we jump to the next thing.
Yeah.
We're halfway through November. Well, a week
Right.
into November.
Right.
It was 70 degrees this week, almost 80.
Beautiful.
What are your thoughts for winter? Are we going to have a cold, snowy winter, or like winter like last season where it was, we didn't get much snow, it was seasonably warm, unseasonably warm?
This is wishful thinking on my part because, as you know, Joe, I'm a skier, so I like the snow. I think it's going to be cold and snowy, and I'm going to love it. Yeah. So I think
that means I'm not going to like it.
I think you're not going to like it, but I'm going to love it. So I think from a skiing, perspective, it's going to be great. So I'm excited. I think we've had 2 or 3 pretty mild winters in a row. So I think the party's over.
All right. I don't know. I'm going for the mild winter.
Going for the mild.
Hopes.
Yeah.
So Thanksgiving.
Yes. Thanksgiving. So Joe, what are some obviously you come from a large family and you guys have a lot of traditions. What are some of the things you guys like to do over at the Leone house?
Eat.
It's
always a giant meal with 8,000 sides, and we eat all day. Mm-hmm. We don't eat again. We just eat all day.
You see, it's just kind of a perpetual graze.
Yeah. Maybe wear some sweatpants to be able to grow into them.
Exactly.
But no, I mean, I think I got to say my favorite side dish for Thanksgiving is the stuffing.
Mm-hmm. Okay.
That's my go-to. How about you?
I am. You know what? Thanksgiving. I do like turkey, but that's really about it. My favorite part of the meal is probably the pre-dinner cocktails. To be perfectly blunt, is what I really enjoy the most. So
Not the desserts.
Not the
We have a lot
desserts.
of desserts.
Yeah.
We have a pie for every person.
Yeah. We'll be breaking out the limoncello at some point during the night as well. So we're excited. We got some left.
So what about football? You watch football?
I do watch. Yep, we do watch. I know we got the game starting at 12 o'clock. Goes right through the night. Obviously, a lot of the traditional games that we always see, which is fun to watch.
Bears, Lions. That should be a good game.
Yep.
The other two on the slate: Giants, Cowboys, Dolphins, Packers. I'm not too excited.
But the Dolphins gave the Bills kind of a test.
They did. They're 2-6. So another going up against a good team in the frozen tundra of Green Bay, and they might take another one on the chin, hopefully.
So, lastly, just real quick on the Bills, obviously big game this week against the Colts. They're finding ways to eke out these wins. I mean, they've blown out a few teams, but it's nice to see that they can win some of the closer games.
Made a kick. Winning kick.
That is
a very long game winning kick.
Unbelievable. Tyler Bass redeemed himself.
Yeah, I mean, I think big game coming up. Not this week, but next week with Kansas City.
Right.
But the injuries are starting to be a little concerning in the receiver group. No Keon Coleman this week. Questionable. Yeah. So.
Okay.
It could be tough sledding in Indy, but hopefully they get by that one, and we get some players back next week for a big matchup with KC.
Exactly. So Joe, before we shift gears and talk about mortgage and real estate and rates, our esteemed closing manager, Victor Coriano, sent us a Thanksgiving Day poem, and obviously it sounds like you volunteered to read it. So you want to share it with our listeners?
I will read it. I mean, he asked a good question, right? We go straight from Halloween music to Christmas holiday music, but no Thanksgiving music. Mm-hmm. So he took it upon himself to write this poem, which is fitting, kind of fits into what we do. So here we go. On this Thanksgiving, we're grateful and proud for homes filled with laughter, warm and loud, for buyers and sellers and dreams taking flight, and closing day smiles so genuine and bright. In mortgages, too, we find reasons to cheer, helping families settle year after year. Through paperwork, rates, and approvals we trod, guiding clients to homes with thanks to applaud. So here's to foundations, to rooftops and walls, to each open house and answering calls. May your Thanksgiving be cozy, your hearth burning bright, in homes that bring warmth and joy every night. That's
good. That's good. This might be a new tradition where you read this.
Right, we got to read this every year.
Exactly.
Christmas.
Exactly. All right, Joe, let's talk about the market, what we're seeing. I know that you just pushed out the results or the stats for the month of October. What do they tell us? What do we learn?
Yeah, Monroe and surrounding counties were pretty much flat from last month, right? We were 8.99% over ask in September. We were 8.98% over ask in October. We continue to see increase in government volume. We had 10 government applications making up about 10% of our volume in Monroe and surrounding counties. Monroe County on its own went from 8.03% over ask in September to 10.32% over ask in October. So a little jump there.
Right.
Kind of surprising. The highest percentage over ask was a home in the 14615. It went 58.29% over ask. List price was $199 and went under contract for $315.
Wow.
So we're still seeing some of that. It seems to be those price points under 200 that are still drawing a lot of activity. Fairport actually took the lead with 12 transactions this month. Typically, we track, what was the most transactions per zip code. In the last month, it was Arundecoit. This month, it was Fairport. 11.91% over ask on those transactions. And only 5 zip codes had an average below ask, and 3 out of the 5 only had 1 listing. So Monroe and surrounding kind of status quo. We are hearing just candid feedback from agents that we're talking to that it's less competitive in the market right now.
Right.
We'll talk about why a little bit that is in a minute. But good time. It's a time to buy, right? It's a time to be able to go out and actually get your offer accepted. And I think we're seeing that as we continue to see strong application months, just because people are actually out there. We've talked all years that we have a lot of buyers.
Right.
They just couldn't get offers accepted, and we're starting to see some of that trickle in. So that's good to see.
I mean, Joe, to that end, when you look at just how GRB performed this October versus last, I mean, from a application volume, just purchase money loans, I think we were a good 20-25% higher this year than last year.
Yeah.
Which is great.
Yeah, absolutely.
So we're grabbing more market shares.
So if we go down the throughway to our friends in Onondaga County, Onondaga and surrounding counties finished 2.9% over ask, which was just a little below the 3.85 we saw in September. Government volume there jumped to 30% of our business, almost 31%. So a big pickup.
That's great to see.
There. And a lot of VA loans, which is great to see. Only one of those transactions, however, was in Onondaga County, and then the remaining 7 of those were in the surrounding counties. Onondaga County on its own was at 9.31% over. It's a big jump up. September was only 4.4 over. So, and the average list price went from $255 to $254, or went down from up from $255 from $254 in September. So, highest percentage over ask was in the 13205 zip code. Went 33% over. It was listed for $99.9. Went for $132.9. And then the highest dollar over ask was in 13104, going $55,000 over ask, which was about 20%. And then surprisingly, in Onondaga and surrounding 7 zip codes had an average below ask, only with four only having 1 accepted offer in those zip codes. Okay. So a few more below ask in Onondaga. But we, again, this time of year, good time to get out and buy.
Yep.
We're hearing that on all fronts, and, get those offers accepted if you were on the sidelines or, were interested in buying earlier in the year and kind of put it on hold. If you are still thinking about buying, it's a good time to get in the market.
Just a reminder for everybody that's listening. We're really excited that we are on November 12th going to be launching our new GRB website, which is going to be just loaded with resources and content. We're actually going to have a realtor resources page. In that page, Joe, or on the website, the data that you share each month that I know also gets pushed out is also going to be housed on this website. So I think that's going to be, great, that people will be able to, that the agents that we work with or would like to work with will have this as a resource going forward. So to shift gears, obviously this week, big week. Obviously this was the election. One of the things that I just wanted to share with everyone is that, as divided as the government, has been, and kind of where people kind of sit, the one thing that both Democrats and Republicans agree upon is the fact that there needs to be action taken to improve the housing market, to increase the inventory of homes, improve the way that homes are being purchased, the affordability aspects of things. So I think, I think we're encouraged that I think there will be some things that come in the new year that will help us in that regard. But also this past week, we had another Fed meeting as well, right? So obviously the Fed elected to reduce rates by 0.25%, which, as we have discussed, doesn't necessarily lead to lower mortgage rates.
Yep.
But Joe, maybe you can speak to where rates are right now and what, as best we can, even though we can't predict per se where rates are going to head, but what should people expect the next few months?
Yeah, so it's been an interesting month and a half or so since the Fed last met and cut the rates by 50 bips. And when that happened, everybody expected rates. Oh, Fed cut 50 bips.
Right.
Rates went in the complete opposite direction, right?
Right.
We were in the low sixes, and then slowly we moved to above 7 again. Interestingly, one of our loan officers went back and looked at the Trump effect, right? Mm-hmm. Last time Trump was elected into president, what happened to rates? Rates jumped quite a bit last time Trump was elected, and continued in this higher phase, partly because, and we saw it again on Wednesday after the election, of just we had a big jump because people in the stock market as well as in the 10-year Treasury, right? And people thought, well, the economy is going to do well with Trump in office, which was the reaction to him being elected. But we have seen some retreat from that over the past couple of days as the euphoria has worn off for some, but reality has set in for others. But I think we're in that. We just went back under 7 from a national average perspective. So that's encouraging to see. But it does feel like we're going to live in the 6 to 7% range for some time.
Right.
We did drop when we really didn't expect to drop before the Fed cut rates. Yeah. So there might be some unexpected drops that come. But the jump this year wasn't as high in rates as it was when Trump was last elected in 2016. So,
as a matter of fact, when the Mortgage Bankers Association just updated their forecast, they really, have the interest rate environment in that 6 to 7% range, really for like the next couple of years.
Yeah. So, and then again, like the weather, right? Nobody can predict it accurately.
Right.
So,
right.
Those predictions and everything we see, it's all reactionary to what actual data comes through in the end.
Right.
And so it's, I think that the products that we've rolled out, like the Rate Relief Program, the Rate Relief Plus program, one is we'll waive your underwriting and processing and appraisal fee if you close on your house now and refinance with us by the end of 2027.
Right.
And the other is, that temporary relief for the first year of your mortgage, getting a payment based on a rate that's 1% lower than your actual rate.
Right.
So between those two programs, we have solutions, and we always hear, don't wait to buy because of where your interest rate is. And so we just continue to discuss that and push that theory because it is true.
Right. So one product update we just want to share with our listeners is, obviously GRB has been, as a member of the Federal Home Loan Bank of New York, we have been one of the largest, home buyer dream lenders throughout the state. Obviously, we're excited that December 10th, Joe, I think it is, we're going to have the training on the new program and what's involved. But obviously, this is a great time of year. Once we get the details, which will be very soon, we'll share them. But obviously, from a rollout perspective, kind of speak to Joe how we've done this in the past and how we'll handle it going
Yeah,
forward.
I mean, unfortunately, the Homebuyer Dream money is first come, first serve.
Yep.
You get a pool of funds from the Federal Home Loan Bank. We typically don't know how much money we're going to get until about 30 days before they launch their program. And then once people get under contract, they can reserve a spot for the Homebuyer Dream, and you need that contract to be able to actually reserve the spot. So we are planning to do an informational type webinar, probably after the training that we get for potential buyers and realtors they'll be able to log in, and
Right.
we'll talk about what the specifics of the program are for the year. If there's any new nuances to the program, last year they rolled out the Homebuyer Dream Plus program, which was meant for people that were above the 80% area median income, but below the 120. There is a new product coming out this year, but we'll get more details and share more details as they become available on that. So, again, this push to close the generational wealth gap and also make homes more affordable for, it continues to be a strong push across the FHFA, HUD, and, also the Federal Home Loan Banks as well. So,
Right.
Great programs coming, and we're excited to be able to launch them again. So, I have a listener challenge.
Okay.
So, I don't know if I've ever asked you this question, Mike, in your costume closet. Do you have a Santa costume?
Joe, I actually have several.
That doesn't surprise me.
Depending upon the party and what the theme is,
Right.
I can mix it up.
Okay, I don't want to imagine what the different variations. might be,
Okay.
so
Well, you let me know.
We'll leave that for the wandering minds.
Okay.
But when we looked at the numbers of our podcast, right, we have 70% of our listeners to our podcast do not actually subscribe to our podcast. 29% roughly subscribe.
Okay.
Almost 30%. So if this podcast, that number gets up to 50%. So 50 unsubscribed, 50 subscribed listeners. So we
Okay.
need basically 20% of our listeners to actually go in and click the subscribe button.
Okay.
A challenge for you, maybe the next podcast, since it'll be December, right? We a little Christmas themed. Maybe one of those Santa costumes could come out.
I was hoping that you would say that I was looking for a reason to put one on, and you just
we
did.
go.
So I'll make certain that I take them both to the dry cleaners to make sure they're good to go, regardless of which direction I go with. But folks that are out there, I'd love nothing more than to do the December podcast, dress up as Santa Claus. And so let's, subscribe. We just got to have 20%, right?
Right. So 20. So we got to get to 50%.
From 30 to 50%.
50% not subscribed.
Okay, perfect. All right. Ready, but well, listen, I hope everybody has a wonderful holiday, and Joe and I will see you again in December. Have a great day. See you.
Thank you.